This is when you know you have opportunity. When you have long overgrown grass. Do not get emotionally attached to the color of the house, the look of the house. 170 to 190,000, and a place like this we can rent out for about $2,000 a month.
We will make around $2,000 rent. People might ask, okay, but how much is in taxes? This is how we invest and where we invest, and we are buying America. Joe, Diego, we are outside of a beautiful house.
I mean, look at this. This is when you know you have opportunity. When you have long overgrown grass and you look at the outside of this, looks like that needs a little bit of work.
Yeah, little bit of work.
And then if you look at, let's take a quick look at the homes across the street.
Beautiful houses.
Right? Very nice, landscape maintained, they cut their grass. This is how you start to like see opportunity. So when you're driving up and down these streets, and then you get a place like this amongst these nicely done homes, then you know there could be something here. This is the opportunity we want to explore to see if there's something that makes sense.
And we're gonna make some numbers. That's why I got my notebook, my pen, I'm ready. So we're gonna make some numbers to show you guys why you have to invest in this kind of property instead of going to the fancy stuff, Diego.
All right, let's go inside.
This is not sexy.
Okay, and here's when you really know that the opportunity becomes bigger and bigger. The minute you start to like scratch and you get itchy, man, that tells you there's even more opportunity. And look at our nice little friends here on the ground.
Oh my gosh.
That's a good sign.
Get over here.
This has been abandoned and it's obviously not been taken care of. So again, good opportunity. I get a little scratchy and itchy.
So we need some pest control first. Or at the end, where?
A little bit of pest control. So here's where we would start. This place would be bombed. We would have pest control before anyone comes in so that, you know, you're not getting the guys like doing this. And then, okay, obviously, look, we look at walls like this. This home, it's pretty evident that no one has occupied this for some time, and it's going to be a distressed purchase.
What kind of repairs we have to do?
The most important thing when we're walking through a place like this is you want to make sure that like structurally the home is like sound and solid. We're not really worried about if there's holes in the walls, if there's pest control required. Stuff like this, I mean, again, like the bones, right? Not where we want to go into a home that's been like termite infested, where the bones are like weak. As long as structurally it's solid and strong, aesthetically, anything can be done. Here's a kitchen. This obviously would be completely gutted. Walk into the back here.
It has a pretty good, nice, decent backyard.
Got a nice, decent size. It looks like there's a shed there. And the most important thing when you're looking at properties like this is, again, you want to make sure that the bones of the home are solid. We know that there is rotted fascia. All this stuff needs to be repaired. But when we get pest control in here, it's pretty evident from walking through the home that we can see there's like termite infestation.
Yeah.
So we would have a pest control company first make sure that we clear all the termites, and then start to look at how damaged is the framing, so we can start to figure out what would need to be replaced so we can make it stronger. After a lot of this fascia is replaced, then what we typically like to do, right, is so that we're safeguarding the home, is replace the wood, but then replace it with vinyl fascia and soffit. So now you have a protection over the wood. That's a good safeguard.
We're not so used to these kind of homes in Mexico because wood is considered like for the poor people. You have to use like brick and concrete, you know?
Yeah.
It's very different. So a lot of times investors in Mexico that wants to buy property here do not understand why, and they feel like this is not gonna last longer. So this house How many years do you think, when do you think it was built?
This is
40, 50 years ago?
This is easily probably a home that I would guess was built either between the 40s and the 60s.
Yeah.
So we have a little bit of like bubbling here. So what we would do is we'd get our roofer from the street. I took a look, I glanced from a distance, and it actually looked like the roof was relatively new. So we would have one of the maintenance crews come in here and probably like verify that this is like old water leaks and damage, because the roof did look relatively new. You can tell when you're looking at the roof because the shingles start to like curl. You know, when you see that, that's definitely a sign that they're worn, torn, and have to be replaced. Nice, cute little 2-bedroom house. Here's probably the most important thing that we have to consider when we're going through these properties. Edmundo, just as you had said, like in Mexico, they're not used to like maybe like a wood frame home. I always have said in my 30 years of teaching people how to do this, do not get emotionally attached to the color of the house, the look of the house. If you're gonna get attached to something, get attached to the numbers.
Yeah.
The numbers are the most important.
I don't know how people think in Canada, Joe, but for example, in Mexico, as you said, people get very emotional. People is like thinking that they want to buy a house like if they were going to live in there. No, an investment home is very different to a place where you want to live.
Everyone needs a place to live.
And I think that's why a lot of people invest in apartments in Miami, because they dream that they're going to be there, but they bought it for investment. That's not an investment. They're losing a lot of money.
No, you're 100% right. I've seen a lot of amateur investors that want to get into like real estate. The truth of the matter is there's a lot of money to be made in real estate, but be attached to the numbers. That's what you need to be attached to. Not like I've had investors walk into a home and husband and wife are like, oh my gosh, the TV would look really nice. And the tenants could probably put their couch right here. Listen, a tenant is not thinking the way you're thinking. Don't worry about where they're gonna put the TV, where they're gonna put the couch. Worry about what do I need to do? What's it gonna cost? What are the expenses to make this a solid, sound property so that a nice family can come in and call this home.
So this is not sexy. Let's go outside for the sexy thing, the numbers.
Let's talk about numbers, Joe.
Okay, before we do that though, right? So just a couple things that I want to point out. Like you can tell, all right, so like there's wood rot here.
Yeah.
A lot of the stuff we have to calculate when we're figuring out our numbers. This is an expense that we're definitely gonna have to incur. If we back up a little bit, one of the major expenses when we're fixing up a home is a roof. We can see it. We can see it from this angle here. If I had to estimate, this roof is no more than a couple years old. It's good architectural shingles. It's solid. Nothing is curling. So that's
way better than my house.
That's a good sign.
And that's a lot of money on roof. I mean, roofing is expensive. People do not think on that.
So that is definitely a good sign. All things that we need to like factor in when we're calculating our numbers. Okay, let's talk about numbers.
All right, so 2420. I'm gonna write down. Sorry guys, we don't give you the address. We don't tell you exactly what's our location because that's specific for our members of Buy in America. Because we do this work, this research, we help them with these projects in our membership program. But man, we gotta protect our investors, our partners, so they really make their money, because in real estate, there's so many sexy, fancy things that people is promoting online, and we don't just do it open to the public, just for...
We need to protect our edge.
Exactly. So there's very nice niches here in Florida, but where? Become a member.
How much do I need to put in this home? How much can I rent it for? What will be my free cash flow? What are my expenses?
So anytime we go into any property, right, we have, because of the extensive experience we'll have a pretty good rough idea as to what it's going to cost. But do you base your decisions off of just a rough idea? Nah.
No.
So what we would do is say, okay, there's good opportunity here. Let's bring in one of the crews that will fix the place up and then give us a much more accurate assessment. But I can tell you guys, based on what I'm seeing from the exterior, this home is about 1,000 square feet. Replacing kitchen, we're gonna have to replace bathrooms. The roof, that's a plus, because that's a major expense that we know we're not gonna have to incur. I looked at the air conditioning unit.
Yep.
I glanced at it in the back. The air conditioning unit didn't look like it was more than 4 or 5 years old.
Yeah, so
so we should be okay. That's another, major expense.
Yeah.
So from the exterior standpoint, it looks ugly, right? And that's okay, because that's what we're looking for. But with a nice coat of paint, this would drastically look different.
Yeah.
Our major expenses are going to be the kitchen, the bathrooms. If I had to give you, and then like rotted like wood fascia.
Yeah.
Then we want to like put vinyl fascia and soffit. A rough idea is it would probably cost mid 30,000s to get this home looking like the rest of this neighborhood.
So let's close it in 35,000.
So
to give a round number.
Roundabout idea, so that at least we have an idea of like what we're playing with. But again, to get down to like the nitty gritty, yeah, we'd have the team come in here and write it down with precision, so we know exactly, what it's going to cost. Now,
before repairs, how much is this house going to cost me?
So something like this, in order for it to make sense to acquire, we probably looking in a neighborhood like this, we're looking at low 100s for it to make sense as far as our acquisition. So after everything is said and done, if we're into this property for a rough around idea, like 170 to 190,000, and a place like this, we can rent out for about $2,000 a month. Those are great numbers. So, Edmundo, I'm gonna let you speak to
$2,000 rent a month?
$2,000 rent a month. I'm gonna let you speak to, you're from Mexico, Diego, you're from Mexico, I'm from Canada. We all decided to like create a little hamburger and meet in the US. So I could tell you, as a Canadian, you're not buying any properties anywhere in Canada for $200,000 and making $2,000 a month in rental income. It doesn't exist. So for all the Canadians that are watching this, yes, this is the type of opportunities that present themselves in the US. This is why, as a Canadian, I came to the United States, because a house like this, even of this size, in the province of Ontario, you're probably talking about an $800,000 house.
Yeah.
You're talking about an $800,000 house. And then in rental income, you might be talking about $2,500. Maybe if you're stretching it, $3,000. So you got to spend $800,000 to get that kind of income generated. It's not feasible. It no longer makes sense. When people that were doing it there 10 years ago, 20 years ago, 30, 40, you made a tremendous amount of money and building wealth through buying property and renting. But it's very, very hard to do that kind of stuff in Canada. Are there areas to do it? Very remote. There's many more areas in the United States where you could do this kind of stuff. And imagine building a portfolio, 5 properties at $1 million, and you're getting, 8 to 10,000. These are obviously like rough numbers, but could still be great income, and it still exists. And there's a lot of pockets like this that exist across the United States, and we're in not just this kind of an area, but we're in other states, other pockets where this kind of stuff is still accessible.
Yeah, the thing is that this is not sexy, this is not fancy, so people get attracted to like big places in the woodlands in Texas, for example, in Houston, or they like the Cantera in San Antonio, or especially Mexicans. And then people from the South, Mexico City, and Latin America, they love Miami. It's incredible. Oh, yeah. And everybody thinks I'm going to get an apartment over there because it's so nice and it's growing and whatever. But the cash flow, the monthly cash flow is what is going to make sense. And do you think these homes are not going to be more value in 10, 20 years? And then the other thing, you put $1 million in an apartment in Miami and you just have one property, all your money in one basket, right? All the eggs in one basket. Over here, you have like several homes. If you lose one of the renters, no problem. You still have 4 other properties to pay for everything, right?
Yeah, 100%.
So, and it's way easier.
That's the key, by the way, to diversification.
Yeah.
What you just said, Edmundo, is what most amateur investors fail to realize is they'll go and buy $1 million property because it sounds sexy and buying it in Miami. But I would rather stretch that dollar and instead of one asset, have 5. And like you said, if one is empty, you got 4. If 2 are empty, you still got 3.
Yeah.
But if you got that $1 million property that's empty, I mean, that now becomes a money pit.
Yeah, and Diego, we have talked before the affordable housing problem in the U.S. And it's way easier to find somebody to pay you $2,000 for a house like this than an apartment in Miami that is going to cost you what, $15,000, $20,000 to because it's worth $1 million. So there's not too many people that can pay for that. And if they can pay that kind of rent, probably they could buy it by themselves instead of renting it. So these kind of homes, I think it has great potential because if you also compare it, let's say that this small family, 2-bedroom house is gonna come here, or even a couple, you know? If they wanna rent an apartment, we went through a very nice complex. How much do you think it's gonna cost an apartment?
Oh, very easily.
For a studio.
Yeah.
More than 2,000.
2,500, yeah.
More than 2,000.
Yeah.
You live way more comfortable in something like this.
Yeah.
You know?
Yeah.
So
And as those things become more expensive, as places like Miami become more expensive, as other neighbors within, like other neighborhoods within like a 5-mile radius, as all those become expensive, what happens to areas like this? They become more in demand
yeah.
because of the affordability crisis.
Yep.
Yeah, and even if that changes, because we're talking about keeping this property for long term, you can know that in any cycle, even if the market cycle goes up and there's more optimism in the markets, you still need affordable housing.
Always.
You're not dependent on someone trying to waste money on a brickle
Yeah.
penthouse.
And I think the three of us can agree, right? Where's the crisis headed? Is it being controlled? Is it going in the downward trajectory? Or is the crisis of affordability going in an upward trajectory?
Yeah.
I think we can all agree, right?
18 years ago, they lost control.
Yeah. So, neither one of us can stand here and say this is what housing is going to look like 5 years from now, 10 years from now, 15 years from now. But the reality is, like, families looking for affordability, whether it's a year or 5 years or 10 years from now, properties like this will always be in demand.
Yeah. And probably this house, you invest around, let's say 190, probably in 7-8 more years, it's gonna be maybe 240, 250. You can refinance it, get your money and go for another house or 2 more houses or something like that. Once you establish, and you have always said, Joe, that it's better to start with 1 or 2 homes paid cash, and then we start going to financing, so you get a better business plan for the bank and get better interest rates and stuff like that.
You learn to become disciplined.
Yeah.
This is a wealth building process. It's not a get rich quick overnight scheme. So for the people that are listening to this and they're interested, if you're looking for like get rich quick, right? This is not for you. But if you're looking to accumulate assets and then look back 10 years from now and say, hey, I've built a really good portfolio of assets and they're producing good income, that's the point of doing this. And then the goal is for yourself to create intergenerational wealth. But it's a methodical like process to like building wealth.
Yeah, so Joe, we will make around $2,000 rent. People might ask, okay, but how much is in taxes? How much is insurance, maintenance, administration fees?
Property management.
Yeah. What would you think on rough estimate?
So I would say that the key elements to consider when you're figuring out your ROI and getting to your net is, as you said, property taxes, your insurance, your property management. You want to set aside reserves, because we have to be real here, right? Just like in any business, things are prone to happen. Even though you fix up a place really nice, who knows? There could be an issue sometime down the line. So you always want to have reserves and be very smart about your calculations.
So with those reserves, you mean every month I separate part of the income on account for any surprise that the house may bring?
Correct. And I think there's like a lot of amateur investors build up a portfolio and then they get this like really good cash flow that comes in and then they survive off it and they blow it because they think, oh, I'm never going to have any problems. That's Another mistake that investors make. Always set aside, I mean, people have been taught, set aside funds for a rainy day, right? Well, it's the same thing when it comes to property. Set aside a little bit, every month just for reserves. We definitely like to go in there and fix them up where we handle all the major stuff. But again, you need to always be thinking into the future, down the line, and just putting these safeguards in place. Long story short, without having the exact property tax figures, insurance figures, I mean, I've done thousands of these kinds of homes. I can give you a pretty good guesstimate, which you will probably end up netting by the time you handle all those expenses. You'll be in the low 1,000s. So, I mean, you can walk away with like $1,200, $1,300 in net income on a property like this, monthly. And here's a really nice thing about something like this. When you take, let's say you had that 170,000 or 190,000, you can go put it in the stock market. You can go put it in crypto. You can go put it into a lot of different investment vehicles. And if I were to say to the investor that's doing that, hey, do you know what your ROI is going to look like in 6 months by the end of the year, middle of 2027? No one really knows. It becomes very difficult to predict, right? The beauty of at least incorporating, I'm not saying put everything you have into real estate, but it definitely must, as far as part of your wealth building process, nowadays you should have real estate as part of your portfolio. The beautiful thing about doing stuff like this is there is predictability and there's consistency. So if you're making, let's say, $1,300 a month, it should be pretty safe to say in September you're making $1,300. October you're making $1,300.
Yeah, you can make plans.
In November you're making $1,300. So as a pretty conservative investor myself that doesn't like to speculate, I like to create performance projections. I like to sit down with my accounting firm and be like, all right, so here's my portfolio. Here's what I can do with tax. Here's how my portfolio should produce over the next like 5 years, okay? It's not going to be exactly, to the penny or to the dollar.
So Joe, what about the taxes? As a foreigner, you would agree with me, Edmundo, that's something that as of today, I would say terrifies people. So in the past, I would say that concerns people, but people are like, I even feel like some people don't take the jump to start investing in the US because they're like, what if I get in trouble? It's like, I don't know what I don't know, so I'm scared about them, but I've heard their strategies, but how? Who's gonna teach me?
So I was making some numbers. So your return of investment is around 6-7%. So people might say, no, I can do that in the stock market because forever it has been 7%, right? Average. But the thing is that the stock market, you don't have, as you said, predictability, you don't have consistency, you don't have tax advantages because you have to pay every single dime that you make in the stock market, you will pay taxes. In this kind of investment, first of anything, you have all the expenses that we need to remodel, they're gonna be expensed immediately. So the first year, you're gonna save taxes actually, because we're gonna be in what we call a loss.
Correct.
Okay, for tax purposes. Even though that you have cash flow, because you already rented it, we have a loss. And the other thing is that we have depreciation in here. So we're gonna be having help. So the 7%, probably 2-3% is gonna be with taxes. The rest is gonna be kind of like free.
By the way, and that 6-7% doesn't even factor in the growth and appreciation of the asset.
That's the other thing, right? So in the stock market, you're thinking 7% because of the appreciation and the dividends that they pay you. But over here, you're gonna be getting rent plus the appreciation of the asset, and you have those tax advantages. So I think we gotta make probably one episode just speaking about tax, in particular in this kind of investment.
Yeah.
And we're gonna be talking about it in more properties. So this is just an example of what we're doing in Buying America. If you have some questions, send in your comments. We will be happy to answer them.